Welcome to my weekend market roundup, 29th May 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems I use. They run on TradeStation and Metastock platforms. I'll be sharing some information today. I will use some indicators that are not part of Q system. I don't intend to offer them for selling. They are not part of Q system. However, I helped one gentleman who developed the indicators, and I helped him integrate it with Q Global. And some of you may be familiar with the indicators, Kahuna, Pocket Pivot, etc. Even if I am able to offer them to selected individuals, I don't intend to create any documentation for them. They are not part of Q indicator set, and I don't claim to be an expert on those indicators. But maybe I will at least today use some of the things that I helped the gentleman integrate. I'll do that along the way. Let's start with global market analysis. Okay, why don't we start with the integrated system? Let's start with the XJO. Global Market Australian Index AXJO. The leftmost chart is the weekly Q backdrop, middle chart weekly Q entry, and the Q2 alternate Q2 entry is actually the integrated system. Let's look at the three charts together. AXJO is in an uptrend. Backdrop color is bullish. The shape is also bullish in the weekly chart. Daily is also bullish, and it is near the watermark resistance. It is significant distance away from the recent low. Therefore, we will not like to buy now. Those who bought near the yellow direction line as price went up from there, maybe not AXJO but individual stocks that gave proper Q trade setup, they may consider booking profit now instead of trying to enter new positions. Now, what do we have on the right hand side? The candle color is same as in the Q entry template, the flow and traffic light colors. Yellow direction line, same as in Q entry chart. Then there is the PSAR dots. There is also a Kahuna dot, bullish Kahuna, red, bearish Kahuna, bullish Kahuna, green, of course bullish has to be green, and bearish Kahuna, red. Then at the bottom, this indicator is red candle high, green candle low, or failure at extreme. At the extreme high, it is red candle high. Next one is ice hole. We have a ice hole failure green, ice hole failure red. Then the PSAR band, and after that pocket pivot. Let me draw again. Pocket pivot, mobile breakout from squeeze with kahuna. This band, which doesn't have any indicator here, that is the viable gap up. Then this band of indicators, this I developed for that gentleman. It is the biggest moves. Biggest move, it can have up to 3 dots. Biggest bullish move in 1 week, 1 month, and 3 months. So we can see AXJO had the biggest move on this day, that was biggest in 1 week, biggest in 1 month, biggest in 3 months. And that was following immediately after a biggest bearish move to the downside, that was biggest down move in 5 days, 1 month, and 3 months. They can help us pinpoint reversal, and they may also help us to take momentum trades. Above that, if I scroll little bit, we have the thrust and jump, bullish thrust and jump, and bearish thrust and jump. So here it was hitting the extreme thrust as it has done in 1 year in cyan color, and jump was nearing extreme level that it had reached in 1 year. Cyan would be the extreme and green color would be near the approaching the extreme. So what are the bands again? Extreme high thrust jump, extreme low thrust jump, no dots here. Then biggest move to the downside, biggest move to the upside, 5 days, 1 month, 3 months. Then it's easier to read from the bottom. Red candle high, green candle low. ISOL, PSAR, pocket pivot, mobile breakout from squeeze with kahuna, and you can see whether it is pocket pivot, mobile breakout, or kahuna. Those can be bullish or bearish. And then viable gap up if we had a viable gap up. Later on I will show how to integrate the scan from Q with this indicator so that you may be able to, again, if it is available, I don't think it will be available for everybody, but if it is available for some people, those who understand at least the meaning of these things, I don't have any plan to document the indicators. I will show how you can scan over thousands of stocks and combine them, these indicators, with Q indicators, Q go with flow and other setups using Q Finder. At the right edge, whether we look at the backdrop, entry chart, or the alternate entry chart, all are bullish for AXJO. It is in an uptrend. By the way, just like the band indicators in Q charts, the addendum, if you hover on them, they show the name. So it is not difficult to follow them once I have the charts. I may hover on them and it will show what they are. Okay, let's continue with the usual market roundup. Topics. Great. In the daily, it very nicely broke above trend line resistance, the breakout happened at the open and it was a gap up move. So what does it mean? Following the Q guideline, it gave a gap long day trade setup using fine tune or precise entry intraday chart, gap long day trade setup, and it was also a breakout long setup for swing trading purpose. Bullish flow, bullish breakout, even for the index with bullish pressure, that is unusual. Breakout in the index with bullish pressure doesn't happen all the time. In individual stocks, that happens all the time, but not in indices. High volume coming out of a Q squeeze. Weekly is also bullish. Overall, it was in a downtrend so far. I mentioned in the last webinar also, Wednesday's webinar, that it was in a downtrend. That downtrend is broken now. It is giving a breakout setup. Does it mean it has come into an uptrend? No, it has not come into an uptrend, but the downtrend is broken for now. And we could take a breakout trade. That's the breakout trade setup in topics, textbook breakout trade setup in topics on Friday. Interestingly, if you look back, the bullish headwind once again could catch the very bottom. Price reversed from the watermark support with a false downside breakout associated with the bullish headwind, and in fact it had bullish pressure also at that time. That would be the time to start buying using Q technique. If we read the alternate chart, it has one kahuna, bullish kahuna. Okay, let's read it from the bottom. If there is any signal, I'll read it. PSAR is green, mobile breakout with a kahuna, and we have a viable gap up. This band is for viable gap up. So we have a gap up breakout move, and it is also a viable gap up. And we have the biggest up move over last 5 days and also over last 1 month. That is looking quite bullish. So we are able to combine now these different signals. Next is China's market, CSI 300. The weekly trendline support is still holding from their price nicely went up. In the daily, it displayed indecision at the top for 2 candles, and on Friday also we have indecisive shape candle. We are not going to take any long trade now. We could have taken long trade several times when price came to the daily and the weekly trend line support. Now is the time to book profit in them. The individual stocks should have given more than the risk distance by now, and we could book profit. By the way, the alternate chart also has the channel. It is right at the channel. Channel is equivalent to, you may say, the boundary lines. Channels, like the trend lines, don't have any lag. So people may look at them as well. The way I am using the channels is that we have 2 channels. One is longer term, one is shorter term. I am using them to see within the longer term downtrend, the shorter term channel, is it trending up? That may point to a reversal. And sometimes we may also look for reversal from the upper channel line, reversal from the lower channel line, or a breakout from a downtrending channel line. Let's go back to topics, because topics had a breakout. I didn't notice the channel. No, the channel breakout is not possible. Channel upper channel is far away. Okay, let's continue. FTSE index. UK market, it's inside a range. That was true in Wednesday's webinar also. And if you look carefully, last 3 days have unusually narrow range, unusually narrow. Doji shape, almost perfect doji for 3 days in a row. In the weekly, it displayed a bear release, then indecision at top, backdrop color bearish, shape is bearish. Not a time I would like to buy. If we look at the alternate chart, PSAR is red, there is no other signal. Therefore, Australian market was in an uptrend, Japanese market downtrend, but the downtrend was broken on Friday. Chinese market recovered from the trend line support in weekly daily, going up for now for swing trading purpose in an uptrend. UK market sideways, and Nifty 50, India's Nifty 50, going up nicely, a little bit more up move and it will make a new all-time high. As I mentioned in the last webinar also, that is where a bearish headwind came earlier. So I'm not going to buy as it breaks out to new all-time high. I will probably look for a false breakout and try to short. If it is strongly bullish, then I will not like to buy the breakout now. I will let it break out, come down a little bit and go up again instead of taking a breakout at the all-time high long trade. I will like to take the next go with flow trend following long trade. Interestingly, it gapped up on Friday with an indecisive shape candle. Now if it gaps down on Monday, then it will create an island reversal. It may trap the bulls at the top. That's another reason I am not going to buy on Friday's close. Friday's candle was also indecisive shape. Global markets are not showing any bearishness. Now is the time to look at the USA market. S&P 500 ETF SPY. Interestingly, though the market went up this week, the backdrop color is remaining bearish. That is discouraging me from taking many long trades. Other than in industries that were languishing, some of the healthcare industries, not that they had excellent buy setups, but I am watching them. But I am reluctant to buy industries that were going up with the market because the backdrop is still remaining bearish, and anyway it is a distance away from the recent low. Later on we'll see the intraday market breadth chart on Q Elite, and we'll see that at the close of Friday, in spite of having a long weekend, Monday is a market holiday in the USA, it is expected that Friday's volume would be smaller. Actually, Friday's volume is small. However, near the market closing, heavy selling came. That is something to note. We don't know if Monday the selling, not Monday, Monday market is closed, Tuesday selling will continue or not. But that was something I noticed. Heavy selling came near the close of the market on Friday. SPY is bullish but already far from recent low, not a point where I like to buy. The new template is not providing any signal at the right edge. QQQ. This is more bullish than SPY because the backdrop color is cyan. However, if you look at the daily chart for 1, 2, 3, 4 days in a row, 4 days in a row we have doji-like candles, and on Friday we have indecision at the top. Not a candle that tells me to buy. In an uptrend but not able to buy looking at this chart. Dia, similar to SPY, though price went up this week, backdrop color is bearish, not giving me confidence to buy. Daily gave an indecision at the top on Thursday. Friday price went up little bit, but again like SPY, heavy selling came near the close of the market, some distance away from the recent low, not a place where I would like to start new long positions. IWM, price nicely went up and closed below the weekly trendline resistance and also the daily trendline resistance. There is a bear release in the daily chart on Friday. It was moving sideways very nicely. It went up from the lower edge and now it is at the upper edge. We could think of buying at the lower edge, and at the upper edge when an instrument is in a sideways move, at the upper edge the preferred trade is a short trade. We would not like to buy at trendline resistance in weekly daily, so there is no long trade in IWM. It's moving sideways. The other market ETFs are not moving sideways, but IWM is moving sideways for quite a while. None of the market ETFs are telling that go and buy stocks. Let's look at the market internals now. Let's look at custom index to see how the mega caps are doing. Mega cap top 20. Wednesday indecision at the top. Thursday bear release. Friday indecision at the top. Backdrop color is bearish, not telling us to buy. So mega caps are also not telling us to buy. By the way, none of the indices are telling us to short also, except probably IWM. IWM we may anticipate a short trade because it is in a sideways range and at the upper edge of the range. But none of the other ETFs, SPY, QQQ, DIA gave a short opportunity. Mega cap is also not telling us to short because there is a trend line support. Not telling us to buy, not telling us to short. Let's look at the total view. I am looking for a distribution count of 2 or more, and that is not coming. That's why I am not thinking market will drop suddenly and sharply. Usually, almost always, before a sudden sharp drop, distribution count starts to increase. But there is no distribution count at all. The percentage of stocks where 50 MA above 200 MA is above 80%. That is the slowest of the MA calculations. Percentage of stocks above 50 MA, it reached the average line. We'll see now if it tilts down from there. If it tilts down from there, it will be bearish. Percentage of stocks above 200 MA is still some distance away from the average line. There is no bearishness in this chart. Certainly no bearishness to say that we are expecting a sudden and sharp market drop. There is no such indication. And let's just look at the Nasdaq versus NYSE weekly internals. to see if the relative weakness of Nasdaq is continuing. The relative weakness of Nasdaq is disappearing. Why I say that? Because the percentage of stocks above 50 MA, it now crossed above the average line. It is still below 50%, but it improved relative to my last webinar that was on Wednesday. Of course, over a number of weeks, NYSE is still relatively stronger because the yellow line in NYSE is flat. Nasdaq is still down. Why I said it improved? Because it crossed up above the average line, but still it is weaker than NYSE. And also the percentage of stocks making new high, that is also continuing to be weaker than NYSE. However, advanced decline, up down volume, both are bullish. That shows that these are exchange level calculations. That shows the market is remaining bullish. Market breadth is bullish. There is no other way of putting it. That's why I am not expecting a sudden and sharp drop. That was a market level view. Global markets bullish or sideways for FTSE, but no bearishness. USA market ETFs, IWM sideways, no other market ETF is sideways. Mega cap top 20 also going up, not in a downtrend, not in a sideways move. And the internals, market breadth total view, Nasdaq composite, NYSE composite internals, all are bullish. Let's now look at the Q edge. Start with the bucket analysis. Friday was almost an unchanged day. The percentage of stocks above mid bucket line went up just by 1%. So it was almost unchanged. And the sectors, industries, stocks, advanced decline was also mixed, around midline plus minus some percentage. 5 sectors went up, 6 sectors went down, mixed picture. Let's look at the 1 month to 1 day sector, industry, stock, advanced decline. This picture is bullish. Remember last webinar, last time when I saw 1 day and 2 day turn red, I mentioned that every time they turn red, they turned back to green again. That happened once again. Now 1 day is bullish. No, I shouldn't say bullish. 1 day is mixed. Friday is mixed. Cannot say it is bullish. Friday is mixed. Today bullish. 5-day period bullish. 10-day interestingly less bullish. And 1 month which was more bullish earlier, it weakened. So there is some change from previous weeks. The 1 month period is not as bullish as it was before, and 10-day also less bullish than 2-day, 5-day. 1 day is also mixed. So if it starts to go down now, that is possible. That will show that gradually the weakness is spreading from left to right. If market comes down next week, if, that's a big if. If market goes up, then the bullishness will propagate to 10-day period, and 1 month period will be more bullish again. We'll see what happens. Friday's picture is very mixed. There is no signal from Friday's sector, stock, industry, advanced decline. And if we have to look at 5-day period, the next period we may consider looking at during the weekend review, weekly period is bullish. Let's look at Finder now. find our weekly, the balance between bullish and bearish signals. That is bullish. All signals 64% bullish. Strength signal 75% bullish. Continuation 82% bullish. But reversal 73% bearish. And as I mentioned earlier, bullish strength associated with bearish reversal, that's actually bearish. So that's a reason to be cautious. There is significant percentage of bearish reversal in the weekly interval. What about the daily interval? Friday, the sector industry stock advance decline was mixed in terms of technical signals and Q trade setups. All signals is actually bearish. So for trading purposes, we have more bearishness. We take actual trades based on technicals. We may combine, of course, industry, market, fundamental, seasonality, but we can make money buying a stock only if it goes up. That's why this technical breadth is very important. And the technical breadth on Friday is much more bearish than the sector industry stock advance decline breadth. Strength signals also overall bearish, trend continuation bearish, and reversal very bearish. Reversals are bearish both in the weekly interval and the daily interval. So we'll see this Friday's weakness in technical signals. Is it going to continue next week or not? If we look at the market breadth intraday on Q Elite, here we are looking at the Nasdaq, NYSE as a whole, and then Russell 2000, Dow Jones Industrials, Nasdaq 100, S&P 500. If you look at the advanced decline, Nasdaq and NYSE, they were up throughout the day and closed in the positive. IWM, advanced decline, turned bearish below zero early in the morning and stayed down throughout the day, closed negative. DIA, advanced decline, was positive for almost the whole day, but right at the close, heavy selling came in and advanced decline closed negative. Nasdaq 100 was positive throughout the day. There was heavy selling at the close, but still it closed significantly positive. Same is true for S&P 500. Advanced decline closed positive in spite of the heavy selling at the close. Up-down volume is also giving mixed picture. Nasdaq up-down volume positive throughout the day and remained quite positive at the close. NYSE is giving very mixed picture. Partly maybe because of the long weekend. Not a bullish picture in up-down volume for NYSE. For Russell 2000, similar to NYSE, interestingly. No bullish picture, no bearish picture, mixed. Closing is bearish. Dow Jones, this is bearish picture. Nasdaq 100 up-down volume bullish, but S&P 500 up-down volume bearish throughout the day. This is a very mixed picture. Somewhat confusing, and that may be partly because of the long weekend holiday. But I was not expecting such heavy selling near the close. We'll see if that is a precursor to further selling next week or not. But there is no such statistics like that, that if there is a heavy selling on the last 10-minute bar, there will be continued selling next week. It's not like that. It's just something we take note, but we'll take actual trades based on how the market moves next week. Now, though there was heavy selling at the close, other than Russell 2000 IWM, which closed marginally negative, you may say almost unchanged, DIA closed positive 0.3%, QQQ positive 0.28%, SPY positive 0.18%. So the Friday was overall bullish if you looked at the market ETFs. The market internals using these real-time charts, that was confusing or mixed, but the ETFs were bullish. In that case, we may put more weight on the actual technical signals, the market technical breadth across thousands of stocks. That is bearish. So that is also telling us not to take many long trades now, rather book or protect profit in existing positions. Now let's look at some of the instruments that I was following. On on Friday, I tweeted about Labu, and I mentioned earlier also I was following Labu. I did trade several times with options and made profit on all of those instances. I shared how I managed those short-term trades earlier. Now this is a picture of Labu I shared. I think Thursday's close. Let's look at Labu on live charts. That's the biotech ETF. It broke out of one trend line resistance, I think on Thursday. Okay, let's go to Q Elite. Look at Labu with the historical memory trend lines. Why I am following Labu is because biotechs were underperforming for a long time. And see, on Wednesday, it broke out of one trend line resistance. And it was inside a squeeze, Q squeeze. So it broke out of Q squeeze, broke out of trend line resistance with a bullish flow. So I took another long position on this day in Labu, and I already took 2 times. I made some profit. This time I don't remember if I used synthetic. Yes, I remember. I took a synthetic. Yes, I took a synthetic, and I remember why I took the synthetic. Let me explain the trade. On this day, when it broke out of squeeze, broke out of trend line resistance, the closing price was 61.42. 61.42. And I saw the next trend line resistance was around 70. 70. So what I did, trend line support and resistances, the Q trend line supports and resistance work quite well. So what I did, I shorted 70 put and I bought 70 call for a very large credit because 70 was out of the money, and this is month of May. I used July expiry, so I have enough time in hand. So what is my expectation? If price comes to 70, by that time my short put will be significantly in profit, and so will be long call. I will book profit in the short put, and that will handsomely pay for my long call positions, plus I will already book some profit. I'll get some money back, put it in the bank. That is how I traded Labu on the day it broke out of trendline resistance. I think this is the third time I'm taking a bullish position in Labu. By the way, there was a bullish headwind earlier. I kept a note of that also, and I saw the trendline resistance was there. The moment it was broken, I took the trade with a synthetic, but the leg is out of the money. Short 70 put, long 70 call. I have enough time in hand, July expiry. if it comes to the trend line resistance, I will not wait for it to break out of the trend lines, next trend line. By the way, after the next trend line resistance, there is no more trend line resistance anywhere near. So if it breaks this trend line resistance, there is higher chance it will continue to go up. So I took once again an early position, and I will keep an eye on it. If it goes to the trend line resistance, I am happy to book profit on the short put. That will more than pay for my long call positions by that time. That's how I took another trade in Labu. Now let's look at Labu using the 3 chart template. On Friday, several stocks pulled back as market saw heavy selling near the close. Labu also pulled back. In any case, I am expecting to book profit at the trend line resistance. Let's see in the new chart there is any signal or not. In Q entry there is already a Q squeeze, and the difference between Q squeeze and other squeeze is that Q squeeze starts to show us the squeeze from the starting point, not after the squeeze has happened, whereas traditional squeeze like this one, Bollinger Band coming into Keltner channel, that kind of squeeze, they signal the squeeze after the squeeze has taken place, whereas Q squeeze starts early. I will show the Q volatility chart later. I tweeted about it. One gentleman asked me the question. I tweeted about it, but I will show the volatility chart again. In the alternative chart, we have a squeeze. There is no other signal on Friday. There was a pocket pivot on this day. Which day was that? On Thursday, there was a pocket pivot. Pocket pivot itself may not be, sorry, not pocket pivot, sorry. That was a mobile breakout. Pocket pivot is this man. And I read the volume was not high. So this is a mobile breakout. And if I hover the cursor, it will show me MOBO. Mobile breakout on Thursday, but I would like to see a Kahuna. As if I am becoming expert on these names, but I am sure those of you who are listening to me, they may be laughing. You are much better expert on these signals than I am, but I am enjoying reading them out on these charts. So Labu, I took a trade in that, and let me show the Q volatility chart. You saw the alternate chart also has a squeeze, but Q chart has a squeeze from long time ago. That squeeze started from here when the volatility bands started to contract. Whereas traditional squeeze starts to fire once it enters the squeeze. Q squeeze starts to signal at the starting point of contraction. And when it becomes indecisive, it may be yellow. Now it is still in a squeeze. When it will come out of the squeeze, it will become green colored, like here. Now, when using Q squeeze or any squeeze for that matter, you may use the squeeze indicator only if there is an actual squeeze. Sometimes the price is not volatile enough, so it was not expanding earlier, and then the squeeze may not be meaningful. So you may look at the technical chart to see if volatility was high, price volatility, and then only put any importance to the squeeze. This is similar to the jump and thrust indicator. Similar in concept, when to use jump and thrust, when not to use. So if we look at the jump and thrust, let's look at the Labu, Jump and Thrust. Let's look at weekly, daily both. Okay, let's look at the daily. This is the thrust indicator at extreme low level, jump also extreme low level. Then starting to recover. For jump, thrust is still at extreme low level. Thrust is rate of change of price over long period of time, a composite calculation, and jump is like how far it has come to the downside, and thrust is how fast it has moved there. So both of them are near extreme, but low jump is starting to improve. Low thrust has not improved. It is improved little bit, but not enough. Now you may look at this low thrust, low jump only after price has dropped significantly. If price has not dropped, then you don't try to read the thrust jump and make any sense out of that. Similarly, if price has jumped up significantly, then you start to make some meaning from the high thrust and high jump. Not when price has not jumped, like in this area. In this area, thrust jump is not firing, but even if the mathematics fired high jump, high thrust, low jump in an area where price is not moving, we may ignore that. That is what I mentioned in terms of squeeze understanding also. You apply the squeeze concept only if you see the volatility band was expanding earlier. Sometimes the mathematics may pick up something, but the chart was not really expanding, then you may ignore the squeeze. Just like in case of jump and thrust, you look at low thrust, low jump only when price has come down significantly, not at any time else. And you look at high jump, high thrust only when prices come up significantly, not in a sideways market. That was a study of Labu, thrust jump also. So in any case, good that we came here, because the low thrust and low jump being at the extreme and the OBV improving. Not that I rely a lot on OBV to make trading decisions, but OBV is there on this chart, so I'm reading it out. I don't make trading decisions based on OBV, not reliable enough in my experience. I use the Q trade setups, they are much more reliable. And thrust jump is at extreme, a turnaround is likely. OBB is improving if you wanted to read it like that, but I would rather put more importance to the bullish headwind and the fact that on Wednesday I showed earlier it broke out of one trend line resistance. I'll be happy to see the next trend line resistance break, and after that there is no trend line resistance nearby. So I took a third long position in Labu. Last two I made profit, and I expect to make profit in the third one also. Expect but not guaranteed. We'll see how it plays out. Now I was looking at some other healthcare stocks that were fundamentally very strong. I might have taken some long position in a few of them. They are fundamentally very strong at a low price point, and I may be okay to hold on to them. Now let's look at healthcare. Healthcare at the close of Friday, it is not the strongest sector, not the strongest. If I sort by Friday score, it is neither at the top nor at the bottom, it's near the middle. So healthcare at the close is not the strongest, though relative to earlier score in recent periods, 1 to the worst performer, now it has improved a lot, score of 7, but in the middle. Now that is because of the pullback that happened at the close of the day. At noon, I had tweeted a snapshot from QH right at noon EST, New York time, right at 12 noon. At that time, healthcare was the best performer, but it pulled back, and you saw which one came to the top now at the market close? Real estate and utilities. Those are defensive. We'll see if that defensive posture continues. In fact, the top three, real estate, utilities, consumer staples, the most three, the best performers at the close of the day are the most defensive sectors. Again, a reason to be cautious. Having said that, let's look at the healthcare stocks. I am not going to industries, directly going to healthcare stocks to revisit some of the best fundamental stocks. These are the stocks that are 3 stars. Here is one, Vivo and QDEL. Let's look at them because I am tracking them for a while. I was going to show this to you. Vivo, QDEL, both are undervalued in terms of primary, secondary, both valuation scores. Both are cyan color. High earnings growth in multiple quarters, and QDEL is, exceptionally strong. 3 quarters, 3 years, very high earnings growth. QDEL. Vivo last 2 quarters, very high earnings growth. Also going up. Now, not only that, why I chose these two, both of them have high revenue growth in the last 3 quarters and the last year as well. So whether you look at valuation, both primary, secondary, earnings growth or revenue growth, they are very strong. Not only that, why I chose these two particularly is because both of them are having great earnings quality and also short squeeze potential. So I aligned as many forces as I could to these stocks. Now technically they are not giving me a trade setup yet, probably. Let's check that out. Vivo. In fact, I have a Vivo long position. I have a long position in both of them. I took an early position. You see the bullish headwind came at this point, and that once again caught the very bottom. And I was watching these stocks, these two stocks, maybe few others also. Fundamentally, I couldn't hope for any stronger stock. They pulled back, and now let me look at it with the new 3 template chart. I could, or you could, consider buying right at the bottom, looking at strong fundamentals and the bullish headwind. From there it has gone up significantly. As one would expect, it stopped at the yellow direction line, displayed an indecision at the top. On Friday it pulled back along with the market near the close, as one would expect. Especially the stock is in a downtrend, came to the yellow direction line, a pullback is likely. I am not going to look to buy it right now. If you bought it around the bullish headwind, that would be fine, but not now. Instead, if it tries to go below the white direction line and recovers again, recovers above the white, by that time yellow direction line will come closer, so you may wait for it to recover above the yellow direction line. And that would be the next buy point. If that happens, that would be the next buy point for Vivo. First one would have been based on the bullish headwind, and in this case I would have used the bullish headwind only because the fundamentals were very strong. Next opportunity in my view would come if it tries to come down from the current price level, recovers from the white direction line and above the yellow direction line. Both will converge closely at that point. Now in the alternate chart, there is not enough bullish signal, not really enough bullish signal. there was a kahuna here, a pocket pivot that was on Wednesday. Kahuna is here on the candle dot also kahuna. So we had a kahuna and a pocket pivot on Wednesday, but that was right at the yellow direction line as I showed, at which point we had indecision at the top, bear release, so we are not going to buy, and see how I am combining the different signals. Again, I would wait for price to come to white direction line, go up from there, cross above yellow, or you can see the channel line now in the daily chart, alternate chart. If it comes to the channel line, we could try to buy at the low point from there as well, which would probably be approximately the same level where the white direction line will be at that time. Channel line may be a little bit lower. It may undercut the white direction line, go up, and the undercutting may stop at the channel line. We will see how it plays out. Now Vivo is also at extreme low thrust, extreme low jump, but the extreme low jump has disappeared, similar to Labu. So the jump is improving, thrust is not. Thrust has also disappeared in the last couple of days. Thrust is extreme low, thrust is not there. So both thrust and jump has recovered. That's also bullish. Now again, as I mentioned, now is not the time to buy. Let it pull back little bit, go up, and preferably go above the yellow direction line. I have a small position already in Vivo, but I entered it earlier. QDEL, I have a small position in QDEL also. Sometimes having a small position helps a trader track the stock. Now, this stock dropped more than Vivo. If you remember the weekly pattern, relatively speaking, it dropped more. But I noticed there was a bull release signal here. Backdrop color turned bullish on that candle. Next candle had an indecision at the bottom with the bullish shape, and after that for 2 weeks backdrop color has remained bullish, though the shape is bearish to mixed. It's neither going up nor going down. Now I noticed on Friday it actually went above the trend line resistance, but at the close it turned down again. It is inside a squeeze, inside a Q squeeze, inside the traditional squeeze as well. If it breaks out of the squeeze, what will happen at that time? It will also break out of the trend line resistance. And if there is a bullish pressure at that time, we will have a breakout Q trade setup. Breakout from Q squeeze, if pressure is there with pressure, and breakout of trend line resistance, that will allow us to buy QDEL with a very narrow stop. Stop would be just below this narrow price range. So very narrow stop will be there if we can get a breakout next week. And that will also give a kind of breakout from squeeze in the alternate chart. Hopefully there will be a kahuna at that time, maybe mobile breakout, maybe pocket pivot. We'll look for them. Those are momentum indicators. For trade setup, I am happy enough to take the trade based on bullish pressure and a breakout from trendline resistance. Again, those who are aware of these names that I'm telling, kahuna, pocket pivot, mobo, if you are aware of this name, you may be able to combine them with the Q signals, and you may already be doing that. Otherwise you don't know these names. You may already be doing that using different platforms. Now you may be able to do that on the same Q global platform. Vivo QDEL, I have small positions already. exploratory position in both of them, and I will see if I can add to them. And I have a long position in Labu also using options, as I mentioned. Now let's look at, I am at the 1 hour point. Let me use 5 more minutes time. A strong advantage, a big advantage of Finder is that we can run it in real time using Metastock Zenith data for USA market, for global markets, and we can run it on thousands of stocks. TradeStation doesn't allow that using radar, and TradeStation scans are not real time. So if we want to run scans on thousands of stocks during market hours, then we use QFinder. That is the scan on Q Global, QFinder, and then transfer the data to visualize it. Now let me demonstrate something I have access to now. Again, I have no plan to document this. I am not an expert necessarily on these names, but let me demonstrate. This is a new tab in Finder, not released, and it may not be released to everybody. Let me flag for something. Let me flag for mobile breakout from a squeeze with a kahuna with pocket pivot. Let me sort by percentage. Sorry. Here the stocks, I opened the wrong Finder. I made a big mistake. I apologize for that. Okay. Do I have the USA Finder or not? Yes, this is USA. I am extremely sorry. The last picture of Finder that I shared, that was looking more bearish, that was for the India market. Extremely sorry for that. Let's look at the Finder signal one more time. This is the problem with trading in multiple markets. Well, give me 5 minutes. Let me correct my mistake. The weekly Finder, all signals bullish, strength signals bullish, continuation bullish, reversals also bullish, not like India where the reversals were bearish. So I correct myself. I was looking at the wrong Finder, different country. The USA market weekly Finder picture is bullish. Daily has the concern in terms of bullish strength but bearish reversal, but all signals still bullish. So what I wanted to demonstrate, let me take that step now. I'm flagging for mobile breakout from a squeeze with kahuna pocket pivot. Let me not take pocket pivot. I don't want to restrict too much. These are the stocks, and there are 1 2 3 4 stocks with pocket pivot. Okay, let me open those stocks. Sorry, again. Well, I am still playing around with it. Instead of opening the charts, what I intended to do, let me see these stocks. What are these stocks? They are having mobile breakout. Let me remove the pocket pivot. I have selected stocks that are having mobile breakout from a squeeze with kahuna. Okay, let me highlight them. And now I am going to look for Q signals. That's what I wanted to demonstrate. I'm going to look for Q signals. So I came to the Q signals daily chart and see. I am able to look at the breakout setups, Q breakout. Now I am going to open them. What am I doing? Go to chart. Now I'm going to open them. And if I find a nice breakout, proper breakout, I will show the 3 chart template. Let me close this one, close this one, close this one, keep this one, keep this one, keep this one. Okay. Okay, so I have 3 charts. One is MRTX. Let me show this chart with the 1 weekly, 2 daily, and you will see how beautifully now I am able to combine the signals. Weekly, nice breakout from trend line, bullish shape, bullish backdrop coming after a bullish headwind that came very near the bottom. In daily, Q entry, breaking from a triangle pattern, breaking from trend line resistance, bullish flow. It was inside a squeeze here. In the alternate chart, this is what I looked for. Mobile breakout from a squeeze with a kahuna, and this is a pocket pivot. So we have a pocket pivot, mobile breakout from a squeeze with a kahuna, biggest up day in 5 days, biggest up day in 1 month, and see the jump and thrust were at the extreme low point. Now it is recovering. So this is giving a breakout setup, and I am able to combine the different signals. I want to show one more chart. This is a stock in a downtrend but giving a nice breakout. This was MRTX, and let me show this stock. It is breaking out of watermark, and let's look at the 3 chart template. In the weekly also breaking out of the watermark with a backdrop color bullish, shape is bullish. Daily breaking out of trend line resistance, breaking out of watermark with bullish flow, with bullish pressure. And in the alternate chart, it's a big move up day, biggest move in 5 days, 1 month, 3 month. This is the biggest move in last 3 months. Mobile breakout from a squeeze with a kahuna. The kahuna is shown also here. So we have many bullish signals, some Q signals, some non-Q signals, and bullish pressure. It's also a breakout. So this is MOD. So I shared 2 stocks, both are breakout, both are having mobile breakout from squeeze with kahuna. MOD is breaking out from a high price level, a stock that was consolidating, and the other stock that I showed you, I think MRTX, Mirati Therapeutics, healthcare stock, that's also nicely breaking out from a downtrend. I don't mind buying stock like MRTX. I expect healthcare stocks to go up. My expectation doesn't mean anything, but it has a low risk entry point. But I didn't check the fundamental strength. You may check that out. I'm still working with these new templates, and again, these are not part of the Q systems as such. If you are aware of this terminology that I was using, I have no plan. I'm repeating again, I have no plan to document them. I am not an expert on them. If you are using those signals anyway, you may contact me. When it is available, I may be able to provide that to you. Let me end today's session here. Market is bullish. There is not enough bearish signal, but I am cautious because market is at a very high level. At the same time, I am looking to buy in industries that were languishing earlier, like healthcare sector stocks. Some of them are fundamentally very strong, so I'm keeping an eye on them. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. I hope to have that on Wednesday at 8 a.m. Eastern Standard Time. I will share the link and exact timing on Twitter page, and you will also come to know from YouTube if you are subscribing to the YouTube channel. Thanks once again. Have a great weekend. Have a great long weekend. Keep safe and no reason not to do that. Trade profitably. Thank you.